Collateral. What is a collateral? Collateral is an asset or property that an individual or entity offers to a borrower as security for a loan. It is used as a means to obtain a loan in terms of a protection against probable loss for the lender should the borrower default. Debt default. A debt default happens when a borrower fails to pay his or her loan at the time it is due. The time a default happens varies depending on the terms agreed upon by the creditor and the borrower. Some loans default after missing one payment, while others default only after three or more payments are missed. In such a case, the collateral becomes the property of the lender to meet the unreturned borrowed money. For example, if a person wants to take out a loan from the bank. Types of retail banks. Broadly speaking, there are three main retail bank kinds. They are commercial banks, credit unions, and certain investment funds that offer retail banking services. All three work towards providing similar banking services. These include checking accounts, savings accounts, mortgages, debit cards, credit cards, and personal loans. One may use his car or the title of a piece of property as a collateral. If he fails to repay the loan, the collateral may be seized by the bank based on the two parties' agreement. If the borrower has finished paying back his loan, then the collateral is returned to his possession. Kinds of collateral. Every business owner or individual should know the different types of collateral that can be used while borrowing. First, real estate. The most common type of collateral used by the borrowers is real estate. Real estate is real property that consists of land and improvements, which include buildings, fixtures, roads, structures, and utility systems. Property rights give a title of ownership to the land, improvements, and natural resources such as minerals, plants, animals, water, etc., such as one's home or parcel of land. Such properties come with a high value and low depreciation. It can also be risky because if the property is sequestered due to a default, it cannot any longer be taken back. Second, cash secured loan. Cash is another common type of collateral because it works very simple. An individual can take a loan from a bank where he maintains active accounts, and in the event of a default, the bank can liquidate his accounts in order to recoup the borrowed money. Third, inventory financing. This involves inventory. Inventory is a current asset account found on the balance sheet, consisting of all raw materials, work in progress, and finished goods that serves as a collateral for a loan. Should a default happen, the items listed in the inventory can be sold by the lender to recoup its loss. Fourth, invoice collateral. Invoices are one of the types of collateral used by small businesses, wherein invoices to customers of the business that are still outstanding unpaid are used as collaterals. Blanket liens. This involves the use of a lien, which is a legal claim, allowing a lender to dispose of the assets of a business that is in default on a loan. Borrowing without collateral. Not all the loans require collaterals, especially if the borrower doesn't have any property to offer. In such a case, there are several ways to borrow money, including first, unsecured loans, second, online loans, and third, using a co-maker or co-signer. And in the unsecured loans, as is clear by the name itself, unsecured loans don't give the lender any form of assurance or protection that the money will be returned. In online loans, With the advancement of technology, there are many more ways to get a loan. In fact, people can now obtain online loans that don't require collaterals. The third is using a co-maker or co-signer. These type of loans do not require property for collateral. Instead, another individual besides the borrower co-signs the loan. That is, he becomes a guarantor to the borrower. This might have given you a fair idea about what a collateral is. And yes, don't forget to subscribe to the channel for future learnings. Thank you.